Welcome to another Founder Wisdom Pod, round two with Josh Wagner. Josh is co-founder and partner at In Revenue Capital. He's got a couple of podcasts. He's quite vocal on social media. He's an advisor, an investor at a bunch of companies, including Statera, Pitstop, Pure Logic, Rivia Health, and so forth. I re-invited Josh because I thought it was quite successful for one and was quite entertaining the last pod we did. It is presented by podbuyer.com. If you want to start your own podcast, if you want to monetize your own podcast, go to podbuyer.com. It's also presented by our friends at Qualia. If you want to optimize your brain, have more focus, memory, and drive as a busy entrepreneur, go to neurohacker.com/CEO wisdom. Josh, welcome to the pod for round two. Tell me a bit more about yourself and what you're up to nowadays.
Yeah, thanks for having me back. Good to be here. We recently closed our fourth investment at In Revenue Capital in April of this year with a company you mentioned called Rivia Health. It's a payments platform for specialty medical groups, so pretty excited about that. The founder, Rachel Martinsmeyer, is an awesome leader, awesome operator, and she's got a good sales team behind her that we've been spending some time with to continue driving the go-to-market.
So last time we spoke about your model to invest in company plus give them much needed GTM advice. Are you still bullish on that thesis? And what have been your latest investments?
Yeah, extremely bullish. So the latest was Rivia Health, the one I just mentioned. And, I'd say that in our portfolio, the three prior to Rivia Health, since our investment, we've helped at least triple top line revenue for all the companies we've invested in. And that's, purely by being very hands-on in the sales, the marketing, and the partnership go-to-market efforts of those organizations.
Right. And this year, what are your top priorities? How do you segment your time on a daily basis?
Yeah, so top priorities are a couple of things. One is we really need to focus on a minimum of 3 to 4 new investments every year. That keeps the funnel moving and keeps our management fees to a level that we can support the business and keep it operationally functional. And then we really need to get into a rhythm of at least one exit per year. So two of our four companies in our portfolio have potential exit outcomes coming up. So there's some opportunities on the horizon. We're just working with the founders and with some partners of potential, either acquirers or moving folks from round to round on what those exit potentials might look like.
You have a system to fetch these high growth company, these investable companies that you can make a 3 to 10x return in the span of 10 years?
Yeah, so a couple of things on that. So our system for acquiring companies is a little bit different than typical venture capital in that we don't lead, right? So we use our go-to-market value add as a magnet to other larger, more established venture capital firms who get looks at the best deals that want to bring us into their investment, right? So they lead the deal, they find really good companies, they say, hey, we need revenue capital in there because we want to protect our investment by leveraging their go-to-market value add. So that's where we get our deal flow from. And then our exit potential is also a little bit different than how we evaluate, different than traditional venture capital as well. So as you may know, traditional venture, you're typically looking at a 10-year horizon. Let's say you have a $10 million fund, you allocate $1 million to 10 different companies. You expect, one or two of those to cover the return capital in your portfolio, and you expect one to be a home run. The rest of them probably fall off into nowheresville. So we do it a little bit different, right? We look for a 3 to 5x return in 3 to 5 years. And we do that by looking at companies that are seed stage. They're anywhere from $500,000 to $1.5 million in annual recurring revenue that we can amplify with our go-to-market expertise. And part of that is really looking for companies that have a really good partner ecosystem that we can sell through. And that can help us amplify our growth in a really efficient way. But then it also sets up potential acquirers, right? So in one of our companies, as an example, we help them build a partner network with some of the largest healthcare consulting firms in the space, right? And now we're in some early talks with one of those firms to potentially acquire the company. So that's how we start to look at accelerating the time to value. We're looking for singles and doubles, not home runs that, cover up losses. And we didn't raise a fund on purpose. We invest in every deal on its own merit. and we put 20% of our own money into every deal we do, and then we go raise the rest from a syndicate of limited partners.
And how much of your GTM playbook do you reinvent per startup?
So, my partners and I are really good at 0 to 10 million. We've all scaled and grown and exited companies in that range. So we use a lot of what we did in our previous companies to apply to the current portfolio that we have. Now the market's ever changing. We try to stay up to speed on current trends, and sales now is harder than it's ever been. But we do look for companies that fit into the sweet spot of what we know. So we only invest in B2B vertical SaaS. We look for annual average contract values, 35K and above, because we feel like it has the type of, we'll call it enterprise light deal cycle that we're really good at and we can really coach founders up on.
Right. And how much of that do you reinvent and is case per case? And is that energy consuming? What's your process, when your current GTM playbook is not working and you sort of need to reinvent it? What's the process there?
Yeah, so we spend about 20 hours a week with each of our founders between the three partners and myself. And really, that is getting into the day to day, right? Like it could be when we first make an investment, we do what we call a go to market workshop and just do a deep dive and understanding everything about their market, their ideal customer profile, who they sell to, what the buying process looks like, what are their buyers doing, thinking, feeling throughout the sales process. And then we make sure that we optimize the sales process to those key stages. And then we start to dive into where are they from a sales and marketing standpoint. So sometimes it's been all founder led sales and they need to bring in what we call a founding AE. So that's where we can provide a lot of value, tapping into our operator partner network and saying, these are people that we've worked with in the past and bring them into some of our portfolio. So we've placed some AEs and marketing folks that we've worked with over the past decade into several of our portfolio companies now to help them accelerate that growth. And that playbook seems to have worked really well in us kind of taking the first crack at it, figuring out, getting our arms wrapped around everything, and then bringing in the right talent to take it and run with it.
How do you select the right breed of founder? And how do you select the right founding AE?
Yeah, it's a good question. From a founder standpoint, because we invest in B2B vertical SaaS, what we often find is the founders are subject matter experts and they're really good at, and they're really passionate and knowledgeable about the problems they're solving. So that's a good indicator, but where you might lose a little bit is they might not be great operators. So it's that balance of how do we, is there enough there for us to up level and help them be better operators? Or is that a lost cause, right? So I could say that, the founders that we've invested in have enough operational, fortitude that we deemed investable. And then we can help up level them to a certain point where they can move forward. Now, the founding AE is a really interesting role. It's one of those things where you can't just go hire some AE who's worked at Oracle for a decade, right? Like those folks, they have all the resources, the assets, the playbooks, it's part of a machine, right? You just plug yourself into the machine. As a founding AE, you're literally building the plane while you're flying it, right? Like nothing exists. So your job is to translate all of the good stuff from the founder's head into a repeatable, scalable process and go execute on that process, right? You're not hiring a team until you get to a certain revenue inflection point. So you have to, be creating the process as you're running it. And it's an interesting role. And luckily we've worked with a good number of folks who fit that profile pretty well, but it's a tough one to hire for.
And what about lead gen? Why not hire a founding SDR before hiring a founding AE?
Yeah, it's a good question. I think a lot of founders like that model because they want to stay close to the sales process, but we have found that we can amplify quicker by, putting a founding AE who can take it close to close, open to close all the way through the sales process. However, in one of our portfolios recently, and we're trying to build this model out, we believe that there is value in a founding marketer as much as there is in a founding AE. And again, it's a little bit of a tough role to hire for. You need folks that can think strategically, but also execute. And that's really in service of the AE, right? So in one of our portfolio companies, we put in a founding AE, a founding marketer, and they've brought on an intern that they're using for that SDR role. So taking a lot of the strategic work that they've lined out, putting an SDR in place to help book some meetings, putting some content out there, driving road shows, and then having the AE really focus on working partnerships and closing the loop and getting those deals closed out. It's been a pretty good model so far for that organization.
Also, why not go the venture studio route in which you could A/B test ideas and see product market fit, and then hire a founder? Have you thought about that model?
Yeah, I've got a number of friends in the venture studio game. I think for now it's a more of a partnership for us in that it's a super high risk game and it's a long play, right? We're trying to be really focused and specialized in what we do and what we're good at and return capital at a uncommonly fast rate to our LPs. And that's really what we're focused on. So that requires us to be really in lockstep with the founders that we select and work with and be, stewards of the capital that our LPs trust us with.
And coming back to the system to select startups and founders, do you have a machine for that? How do you get these deals come to you? Is it your network or do you have a machine for that?
Yeah, and like I mentioned before, so we're very partner centric. Not only do we look for companies that have a partner ecosystem that we can tap into, but we drink our own Kool-Aid. So we partner with some of the best, large established venture capital firms in the country, and we look to them to pitch our value add right in the go-to-market space and actually look for them to bring us into the deals they invest in. So every deal that we've done to date, all four have a lead of that's a bigger VC than us, that's more established. They have a bigger diligence process in legal and financial and things like that. We bring along the go-to-market diligence, and then they carve out a piece of the deal for us to help accelerate the revenue growth through go-to-market expertise.
Roger that. And sector agnostic for now, or do you have some preferred sectors?
Yeah, so like I said, we really like vertical SaaS. So far, three of our four investments have been in healthcare technology. So we've got a bend towards healthcare for sure. We've got one in fleet and logistics. So we do, generally speaking, like logistics. It's a growing market. We've taken quite a few looks at construction and construction tech. Haven't pulled the trigger yet, but an interesting market nonetheless. There's some restaurant tech out there. Haven't really pulled the trigger on that yet either. It's a bit of a crowded space and tough to compete with the big guys, but I think you're going to start to see some things come out every now and then. But for now, there's some fintech that we've looked at but haven't pulled the trigger yet.
Seems that it's quite hard for startups to get capital other than if they are in the AI field, at least seed or pre-seed, for example. Do you agree with that?
Well, there's more money flowing toward AI. That's for sure. And I think the interesting part about it, and I'm a firm believer that just blanket AI doesn't mean a whole lot, right? It's already become fairly ubiquitous where, you're probably a smart enough guy where you could go to chat GPT and build a widget that helps you be more productive in whatever it is you do. You might be doing it already. Who knows? The amount of podcasts you do, you probably do have some sort of AI doing work for you. Um, where it becomes really interesting is when the AI is very functional and practical within a specific niche. And that's why we like vertical SaaS, where it's solving a specific problem. And what becomes really unique is the data asset that it creates that's unique to that industry. So, as an example, we have an AI company that is in the dental vertical, right? They've got more data on the dental space than anybody out there. And as a result, their growth is going crazy because their AI provides more value to their customer because they've just got so much data that they're collecting on that space that they can leverage to help make their product better. So that vertical and niche application, very pragmatic application, is where AI is going to win. And I think that's why you're starting to see, big venture capital. They still have a lean and a bend towards AI, but they're getting a little bit more selective in where they put their money.
Right. Tell me about your podcast angle nowadays. Why the pod? And if your strategy have changed since last time we spoke.
Yeah, the podcast is called The Cheat Code, and essentially my co-founder and I use that as a tool to amplify people that have had uncommon results in their career, right? So we, in our first season, we talked to founders who, did something interesting and something super practical and pragmatic that gave them an uncommon result. Season two, we're focused purely on partnerships. So we're focused on people that have used partners to scale organizations, have exits, have success stories, things like that. And the whole goal behind the podcast is to really just get access to people, right? It's access to founders, it's access to other venture capitalists, it's access to go to market leaders that can either be potential deal flow, potential investors, or potential operating partners with us.
Nowadays, who do you learn from, and what do you believe that most crowds would believe untrue, but it is sort of true?
I learn, right now I'm spending a lot of time just immersing myself into the where money's flowing in venture capital, right? Like what are some of the trends? How are SaaS companies growing? Um, and what are some of the things that founders are doing to differentiate themselves in the space. There's a number of different people. There's a guy from Jameen Ball from Altimeter Capital. I spend a lot of time. He has a really detailed newsletter that takes a deep dive into the data behind the fastest growing and the highest performing SaaS companies. I'm not a super data driven guy myself, so I like to learn from people that are data driven because it takes the side of the brain that I'm not as good at and gives me some data I can ingest. One thing that people believe to be true. I think a lot of folks probably think that in early stages, especially, you're betting on the founder. And I think in a lot of cases that is very true because there's not a lot to go off of. I think we try to hedge our bets a little bit by not doing pre-revenue and investing in companies that have, that low watermark of a $500,000 in ARR. But at the end of the day, you really are you have to have a belief in the founder and what they're doing and their ability to take you from here to there.
Right. And last time we spoke about your day-to-day habits as well. How do you make sure to optimize your daily schedule to be as productive and as happy as you can be?
Yeah, I'm an early morning guy. So if I don't get up at 5 and drink my coffee and go to my workout, I get a little cranky. So that usually sets the tone for the day. I find myself to be the most productive in the morning. So I typically between, I usually get to the office anywhere because I try to help my wife get the kids to school and get them out and those types of things. But between, let's say 8:30 and 12:30, knock out the most important stuff that I need to do just because I'm going to be the most focused and the most alert. I tend to start to wane in energy in the afternoon. So I take a little bit of a lull. I might go home, help with the kids, do something like that, get dinner going, whatever. And then if I need to wrap anything up late night, I might do some writing or things like that. But I try to keep the energy fairly consistent. I do know for myself the mid to late afternoon is a tough spot for me energy wise.
Last time we spoke, I think Charlie Munger passed away. What have you learned from him, Warren, and other great value investors?
Who passed away?
Charlie Munger.
Oh,
Yeah,
gotcha.
the legend.
I mean, yeah, absolutely. I think some of the great investors keep it simple. That's the biggest thing you learn from any like Warren Buffett or Charlie or anyone like that. They don't look at things through a very complicated lens. I think we can overcomplicate things, especially as investors, and try to outsmart people or think we're you don't reinvent the wheel, right? Like stick to your fundamentals, know what your fundamentals are, and don't really stray from that. And that's what we've really been focused on in revenue capital is knowing our thesis. And if it's not within the sweet spot, we don't touch it.
You use writing to think better, and what are some of your copywriting tips?
Yeah, writing is interesting. For me, I went to broadcast school in college. So I learned the oral style of writing, which basically means write how you talk. And I try to, keep that front and center anytime I'm writing anything, whether it's a LinkedIn post or Justin and I are in the middle of writing our first book right now, which the manuscript is due here in about a week. And I think we submitted our last chapters this week and they're off for our first swipe of editing. But even in the book, which, may be a more formal application, I try to really speak like I write. I write like I speak and try to make it informal so that it's simple, plain language that people can understand.
What's your take on partnerships in sales? And do you believe that and or affiliates to be one of the most exciting models currently in sales?
So I fundamentally believe, and my partner and I fundamentally believe that partnerships are the ultimate cheat code in go to market, right? Like without, because sales has gotten so competitive, especially in the software world where, you know, people are not in just this mode where they're buying SaaS just for the sake of buying SaaS anymore. A lot of them have gotten burned by making, big purchases. And now the, the scrutiny is on those purchases more than ever. And you really need to build trust faster than ever as a seller in order to, get in and close deals. And the only way to cheat that trust, I know it sounds horrible, is through partnerships, right? Um, Look for organizations that share your ideal customer profile. They share the same culture as you, and, really dedicate time to building those relationships in that partnership, because they're going to be the closest proximity to your best customers.
What about the affiliate?
I'm not deep in the affiliate world. I don't know a whole lot about it. I can't say that I know how to build affiliate programs out or anything like that. Like we've been more traditional on the go-to-market partner angle in the SaaS world.
Would you rather receive a personalized email or an email with an amazing offer?
A personalized email or an email with amazing offer? Probably a personalized email, because I would trust a little bit more. The offer I might be skeptical of.
Interesting take. What do you believe that AI won't replace in the next decade?
Humanity. I think that, again, if you even just, make it relevant to sales and how people go to market, there is a lot of automation and good that AI can do. But at the end of the day, you and me talking to one another isn't going to be replaced by AI. Like you didn't say at the beginning of the podcast, I had Josh on because he sounded like a robot and he was able to regurgitate information. You said I had him on because he was entertaining and the audience seemed to, vibe with what he was saying. So I don't know that AI is going to replace that unless they just, there's just a level of humanity that we have, that we care about people. I think, I thought you were a good guy. You shot me an email and said you want to do it again. Sure. Right. Like, I'm not going to do that if your AI shoots me an email and says you wanted to do it again. Right. And I don't know. I just think that there's a level of humanity that AI is not going to be able to replace.
Your mental models when it comes to taking a decision and de-risking decisions, what is it like? Is it digesting a bunch of information and letting the gut do its magic? How do you think and make decisions?
Yeah, I'm less analytical and a little bit more relationship driven. So, my decision making process goes a lot of like, where is this information coming from? Who do I trust that's close to this information? Where can I gather insights that, someone I know and trust has them, and get a little bit closer to it that way. And then I use my own, filter of just, hey, does this feel good or not? That's typically how it works for me. I don't get super deep on data. I'm not opposed to it, and I'll let other people run it and give me the outputs of it. But it's more of a trust and instincts for me.
Got it. And conversations, which is a good way of making sense of things, which is one of the reason why I run this podcast. Where can we find out more about you, Josh?
Yeah, go to LinkedIn. Josh Wagner AZ, I believe, is the actual handle. And you can listen to the podcast at inrevenue.capital, and it's called The Cheat Code.